Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So today's video is going to break down NVDA. Right? It's the name everybody was talking about Friday. It's the name that was, circled on my list as prominent names reporting big setups, big potential movers, and it really followed through on it. So let's go ahead, walk through like the trade breakdown. We'll talk about the setup going in and really why I felt it was a really great volatility strategy candidate. So the funny thing is that people on Friday seem to be shocked by the magnitude of Nvidia's move. And yes, when you see it down, 35, 40 points, right? Like close to a 20%, it's like, okay, yeah, sticker shock, it looks like a lot, but in reality, the pattern was almost kind of dictating a move of that magnitude. And that's that's kind of what I was looking at coming into the week. I mean, it seemed like it lent itself to a much larger than typical move for Nvidia. Uh, I'll be honest. I had tended to avoid Nvidia on earnings for the last year and a half. It just when a stock is in a trend like Nvidia was, just this really aggressive uptrend, right, since 2016, it tended to be less of an event when earnings came around. I mean, there were exceptions to that, obviously, especially back in like the early days of the move when it was in the still below 100, and even then the quarter when it really broke out, it was like kind of like it was probably the breakaway gap that it really never came back from, right? The breakaway gap in May of last year. But when a stock's in a trend, you're typically expecting more muted volatility on earnings, and the reason is that people kind of get accustomed to really fantastic earnings, right? The stock performance reflects that. So just consistent higher highs, higher lows, just trend line buying, moving average trend line buying. Um, Expectations get high. I mean, for the most part, Nvidia exceeded expectations and then some during this whole period. But it's just it was expected. I mean, like people were expecting blowout numbers, and Nvidia gave blowout numbers. So like it's kind of like the wheel kept turning. I mean, it just kept going higher and higher, holding trends, and it just led to a more muted volatility when it came to earnings. But October is a different story, right? The trend broke, and that's really what set up this trade. I mean, it doesn't take a master chart technician to realize that over the last month something material had changed on Nvidia. When it broke this 200-day right here, that was that was the first time it had broken it in several years, and it really triggered this massive washout because it was all like that trend hadn't broken, and when it finally did, there was like a pent up breakdown lower, right? So that alone should have been a sign that the volatility could have been higher this quarter. Just the fact that trend broke, that typically leads to heightened volatility. So that's the first sign. What's the second sign? The second sign is that the chip stock semis had been very, very, very volatile this quarter, right? You saw some really big moves in like key names. AMD just a couple weeks ago was down sharply after their results. And I mean, I know AMD is a volatile name, but it's one of several chip stocks that just have had really volatile moves this quarter. And then if you step back even further, I mean, tech across the board has been seeing expanded volatility, right? I mean, like really aggressive trends and a lot of like top tech names have broken, and you're seeing the expanded volatility, the expanded moves when these companies have reported. Granted, a lot of those have been to the downside, but it still shows that the volatility is expanding, right? So you have three things that are indicating expanding volatility: chart pattern breakdown, sector volatility, and then like peer volatility. So like the AMDs and the Intels and so on and so forth, right? Then on a trading or on a more micro perspective, NVIDIA, the trading ranges on the stock have been higher. So on a given day, I mean, you're looking at 10 to 15 point moves on the stock. So the intraday moves have been larger, right? So the intraday ranges have expanded. Now, when I look at NVIDIA, I see some key levels, right? So it's broken down, but it has above 220 here, right? There's a really well-defined gap to 230. So there's basically, if it gets to 220, there's a $10 gap above it, and then the 200-day, you know, maybe a little bit more aggressive, right? And maybe requires a little bit more time, but the 200-day is the ultimate target if the number were positive. On the downside, there's really nothing significant until the retest of the October low, right? There's really no major area underneath until the retest is October low, which was down at 176. And if you go back even further, there's really no material support on NVIDIA for much lower because of that really aggressive trend. It never stayed anywhere long enough to establish long-term support. So when it's going up, it's fine, but once it starts coming down, there's no key points of reference because it never stayed anywhere long enough to establish any. So when I look at it, right, I see 20, 25 to possibly 30 on the upside, right, to close this gap. I mean, like, that would be like a pretty reasonable target, close this gap if positive. And on the downside, you're looking at possibly 25 just to retest the October low. So there's four things right there, right? And then when you go into the options weren't reflecting that. So the options are pricing about 20 points, which is more or less in line with what it's moved in the past, and also, you know, typically what it's pricing in. I mean, give or take, you know, it'll be maybe sometimes 18, sometimes 22, 23, but, you know, when you say 20 ballpark, it's more or less in line. So there was multiple indicators that the volatility, not only in NVIDIA, but in the sector, were expanding, right? The intraday ranges were higher, right? And there was visibility on the chart for a 25 to 30 point move in either direction. Yet the options were only pricing in 20 points. So that's why I thought going with a volatility bet or volatility strategy was interesting here. So that a volatility strategy is, you know, straddle or strangle. So you're basically looking to capitalize on a bigger than anticipated move. So in this case, you're looking to capitalize on a move greater than 20 points. So that's why we went with the strangle. In this case, it's you know, options were about $20, but to like manage that, you can go a little bit further out of the money to cut that risk exposure back. But what happened, right? What everybody was talking about was that NVIDIA had a massive move, and it blew through the first target on the downside, or really the only target on the downside was 176. Blew through that in pre-market, and it actually opened almost 10 points underneath it. Actually more than 10 points. So you know, what had been a 20-point price to move ended up leading to almost a 40-point gap down. I mean, and that's really how you draw up these bets. You know, you're looking for that 2-for-1, that combination move where you say the options are not pricing in the potential, and in this case, the options on NVIDIA were not pricing in the potential. So, as always, I'd love to hear from you guys. Questions or comments. I know I could spend hours like talking about earnings trades and event trades. I mean, it's just great. There's a constant calendar of events coming up, and you know, it just requires going through and sifting out like the top setups. So I love to do it. Hope you guys are starting to like see what I see, and as I break these down, I want you to like just kind of like get in the same mindset of how you like screen for these trades. So again, reach out, questions, comments, love to hear from you. Hope you have a fantastic night, and I'll talk to you tomorrow.